Hello guys, welcome to the Trading Parrot. With the Liberation Day out of the way and with the ugly rejection on the daily time frame, precisely at the time when the candle was looking like a daily breakout, in the context of that rejection, I am seeing some upside and I want to really share my thoughts on that. I want to share what is the alpha and what is that level that we are currently seeing in the charts. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes? That will be really amazing. In my opinion, we really deserve it. We enter on a deal end of March. We managed to squeeze all the way to 85.5. That was my exit point, but I left on the table an aggressive target of 69 RSI. And you can see in here that we managed to get to 68.08. So we were just 1 point away for this rally in here to hit our final target by the dollar. Those 1,000 likes are really gonna help the channel to get to more people, and it's gonna secure that we keep always the alpha for free in YouTube. Let's get into the content. We are seeing some news. One of them is, in my opinion, a little bit bearish. Bybit to shut down NFT marketplace as trading volumes decline. And we can see across the board how all the crypto firms are behaving in a topping year with headlines that we used to see in the bear market. It was in 2022, 2023 where we were getting headlines of exchanges, one, going down, closing facilities, firing people, and we are just in April in 2025. At this point in 2021, 4 years ago, exchanges were going crazy, investing in every single crop. We finally got over the Liberation Day. It ended up turning into a sell the news, buy the rumor. With the rejection of the price on the daily, we ended up falling into extreme fear. But there is something to note in here. Markets thrive on certainty, and with speculation now largely removed, institutional investors may see an opportunity over the coming days to take advantage of compressed valuations. If you look at the fear and greed index, today we are deep in the fear at 25, not as low as the 15 that we have in the last month, but we have to do the due diligence. Do yourself a favor, find a mirror at home, slap yourself 3 times in a row. And as an extra bonus, get 3 espresso dark coffee shots. Make sure that you're very awake looking at these charts that I'm about to show you. Whenever we are in extreme fear, we are hunting for opportunities to long. We are contrarians and we are data driven. That's why you are subscribed to this channel. We haven't lost a single deal. I don't even remember the last time I closed a deal on Bitcoin in a loss. One announcement here, guys, today is Thursday. So remember, if you are an elite member of my Patreon, we're gonna go ahead at 4 p.m. UK time with the private TA session. We're gonna look at all the symbols in priority order. You still have time to join if you're not yet an elite member. My Patreon link is in the description. You get 5 votes that you can give to any coins. You can add coins to the poll. You can add questions. You can join live to the stream, to the private one. You can even join with audio and talk with me during that hour. It's a very small group and it's gonna be fun and educational. We got some questions from people in here from my Patreon community and from my Telegram community, which is absolutely free, that I'm gonna cover in the video later. Let's go first with the price action. That is the main reason you're here, and let's look at that potential upside. So at the moment, this pinch over the loss support was very impressive. Then we lost it, and then we pushed to the global resistance at 69. After that, it was when we saw this big rejection of 27 points of RSI back down. And that pretty much is the last nail in the coffin for this move up. In my opinion, we should be looking now for a channel to the downside. And that means that RSI from 42 could potentially rally into around 59. We need to also acknowledge that on the lower end, we have the 27 that comes from the lowest percentile of the RSI in the past 150 candles. And we also have this massive channel that starts from around 22nd of October, just going lower and lower with the lows of the RSI. And why am I tracking that? Because on December 20th, on 4th of February, On 25th of February, every single time religiously we touch that level. So if you're wondering what that level is on RSI, that is 12, which is extremely low. And I reserve that level as a global reset for the 4-hour RSI to only happen if the general markets now puke in a disgusting manner. Let's look at the prices of that to be sure what are we talking about. So if we just go to the levels of the statistics, respecting what we've been doing in the past 150 candles back in time on the 4-hour time frame, that says that it's pretty normal if we go to 76.255. That is not very difficult. We're going to look at the daily. Where is that level of 76? And if we go with that upside to a level of RSI 60, that takes us at the moment to 86.2. So we have 76.2 and 86.2 on the top end. That is currently the most likely range for a move up or for a rejection that we saw in here and then a move down to 76. The level of RSI 12, guys, is 55K. And that is kind of the are you nuts level. But if we look in here, we've been pushing that range lower and lower. First, we went to 24, 19, and by end of February, we made at 16. So either now we just go in reset at the 76 or we reset at the 12 thanks to general markets really carry on in that direction where we are currently at the moment. Hopefully, Liberation Day removes some of the uncertainty that is driving general markets into now standing literally on a cliff. All right, let's look at the daily. Let's see what's going on in here. On the RSI, we can see that this most recent move couldn't close above 50. I put a tweet out there saying, guys, if we don't close above 86.5, this is just a fake out. Wait for daily close. That is what we always say. If you did that, if you wait for that, you wouldn't have entered with the breakout, because the breakout, all it did is to damage late longs that we're suspecting that we are back into the daily range, back above the 200 daily and exiting from the falling wedge. That is an area that I highlight days before. There is an extreme risk and I'm not convinced. If we close above that, I might consider re-enter. I will say that I was wrong, but so far I'm not yet wrong. We're back 7% down from the highs. And what this pattern says, if you are a range trader within this pattern, you should be thinking there is a high chance that this is just another rejection, an ugly one, and we should get ourselves back into the bottom of the range. 76 is located more or less around here, but real bottom of the range at the moment, if we go at a decent speed, it's around 72. It's no longer 74 or 76. 76 is just a lower low, not necessarily the bottom of the wedge. So keep that in mind as well. By now you're probably thinking, hey, didn't you convince us in the beginning of the video that there is some upside? You have done nothing by talking about lower levels. Well, we need to recognize all those lower levels. What is the possibility of that happening? Because even if we take a long against that opportunity with limit upside, you need to be aware what is your floor. If you don't move your stop loss and you don't trail your position, you can really get wrecked in a big way. That's what I'm trying to say. So at the moment, any move up is a move up against daily resistance. Our daily resistance is 49. We need to really defend 41 because it's our new higher low. It's a higher low, but it's a mixed bag. I'm going to explain why. If we manage to defend this higher low, I'm willing to move this line like this and say, hey, let's forget about this pivot for a moment and let's become bullish and let's look at this with the prism of being bullish, right? Let's cross resistance at 49 and let's rally within the channel. But if I'm bearish, I'm going to leave this line like this and I'm going to say, sorry guys, we lost the support. We have tested that support. We saw a rejection and now we are due for a lower low. So far, we don't have the lower low. We are now bouncing today from 43 into 45. But if today we close below 42, then we get our answer that we are going in this way to fill this area of the triangle instead of filling this area of the triangle if we have a bullish case. Notice that on the 4 hour, we can have some upside, get into 86 or even 87, but on daily close still respect the resistance. Hey, do your studying of these things. Multi-time frame trading, in my opinion, is a must. Trading with different time frames, it is challenging. Today you're gonna do a homework, go to the street, get some chewing gum, and try to walk at the same time. If you cannot do both things at the same time, you're just not done for this. So just chew gum or walk, you cannot do both things. In trading, we need to be thinking constantly. What can the 4 hour do to this? What can the daily allow me to do if we just had that rejection on the daily? Alright, so we have that 49 that now is the resistance on the daily, which we need to track if we're gonna take any long. Be very careful because it's very close to the price and we've been very close already to that. That is at the moment 84,800. On the weekly, we have resistance as well, which is the bull market support band. Our trading range is from 104 to 80K, but we haven't been able to reclaim the top of the range because the bull market support band is in the way, just like it was in 2024. Having reclaimed 80K in here is bullish and it should be sending us into the top of the range, but the bull market support band is not allowing us to do that. And I forgot something about the daily that I was gonna say. We didn't put a bear cross on the MACD, which is great on the daily. CPR for 3 months in a row is starting the month in the same way, and this is pretty annoying, and I'm hoping that in April, worst case scenario, in May, we get out of this bearish pattern, which is to start the month hitting the pivots, not being able to reclaim them, and then hitting support. In this case, in February, we did the second support. Then we started March with the same stamp, trying to get above the pivots, not being able to do so. We didn't touch the support at 74. That's what the model was telling us was going to happen, but it didn't happen. And now we started April and we're doing the same stupid thing again, trying to get above the pivots, trying to hit the first resistance at 92.9, not being able to do it on the second day, seeing a rejection back to the lower pivot and now having the lower pivot as resistance. I'm tired of that. CPR, can you get us past? It's almost like the scene of Lords of the Ring, you should not pass, something like that. Alright guys, so you can clear that stupid joke from your mind, since now I'm a dad, I'm doing dad jokes, I'm entitled in a way. CME Futures has put yesterday a CME gap, and here we are guys, we are looking at the CME gap, and this is definitely, together with a fair value gap, fat and ugly above the price, gonna help the price clear that imbalance. I don't see why we cannot go and close this CME gap in the short term. Price on Binance is 84.8 to 85.3. On CME gap, on CME the premium is 85.2 to 85.5. So just a $300 gap, and I think we can take it. Monthly not looking great. We still have so far a green April, but with a large long wick to the upside. Not too long, but not great candle. I'm hoping that in April we can recover from that. Notice that if we have a breakdown from this range, it needs to be with volume beyond the average. If it's not the case, that means that the breakdown is not confirmed. Every single breakout that we had was with a large candle on the volume beyond the median. And if you wonder what happened yesterday, that was profit taking. That was not panic sellers. Panic sellers put the SOPR at the lower end of the band, and that is a buy signal. Being at this level is kind of a mixed bag, is nothing. If the SOPR would have pinched this level, I would have told you, hey, that is a long, that is an alpha for a long. Notice that on Ethereum, we have the opposite. At that point, people capitulate. That was 3 days ago, 31st of March, confirmed on the 1st of April as a signal to long. Leverage squeeze, so far 7% up in here with this last blue signal. The previous one did 12%. I always share the signals publicly in the channel, but you can get the signal and automate it if you want, if you are a VIP member from my website. Links are in the description. Long-term holders just going sideways in here, and large holders are spiking at the moment in terms of inflows, and this is a little bit scary to say at the least. With 21,000 in deposits and no outflows so far, we really need to be monitoring this because it's pinching the level 1. and that could be an ugly distribution from wells. We need to look at the news as well, because sometimes these are not necessarily distributions, sometimes are internal transfers of exchanges. If we don't see anything explaining this 20,000 by the end of today, that could be large holders about to unload and sell a decent amount of Bitcoin. And although we have had now a day in the green on Bitcoin ETF's spot, we have 3 days in the red, and we are forming a head and shoulders that I'm really hoping we are not gonna complete. We are in extreme fear, as we explained in the beginning, at a level of 25, and let's go with liquidation levels. So we have the CME gap roughly between 84.8 to 85.3, so somewhere in the level of 2, and the risk at the moment is this 81 and the downtrend that we see in the direction strength below. That is just a level of 1, so not the biggest downtrend yet, but we can see that price at the moment is not managing to cross beyond 83.7. My preferred way of trading this is 1 out of 2. Let's say you're gonna trade this with $1,000 and you wanna close the gap. You wanna trade closing the gap. Then if I want to enter at this level, I will not enter with all the volume, because you have here a decent liquidation that goes all the way to 80K, which is weekly support at the moment. So one way that we could do it is entering right here with low volume, and if we go to this area, put the rest of the volume that you're planning to trade. And then once we get into the CME gap, if we see weakness there from indicators and data, then we close the position. If there is a U-turn and a potential V recovery in this area, and we go past beyond the CME gap, we could be heading for that 89K. At the moment, the 89K, yesterday we took a decent chunk out of the 87 and the top of 88.5, but still the 89 remains invicta. You can see that it's been accumulating from 24th of March. And increasing and increasing. At this point, we were already bullish on 89 and we left it on the table. And you can tell that it has become not just new levels of red, but also it's becoming wider into 90.5. And I think that is the level that we could say we are reserving until a reversal. For the time being, I will say humbly that the CME gap is a low-hanging fruit, but I'm not yet convinced that we can go into 89. And even if we go into 89, I'm not convinced for how long we stay there. You can see with how much strength profit takers rug pull as soon as the news went out. We always need to keep an eye for that level 3 that we have not taken in the long-term liquidity that is increasing. I can tell that thanks to this move down in here, there are new levels at 75, there are new levels at 74. So all this is doing to the price action is turning those levels into more attractive. It does not at all guarantee we are going there, but if this reaches a point of break where it just becomes too heavy and there is something slightly bearish, then the puke is pretty much guaranteed. On the top end, we can also see that some shorts are entering, which is great for the bull. So this is just a battle, a game of liquidities, if you want. And you can see that with this recent move up to 88, new shorts enter in here, new shorts enter also at 108. Also in between, some smaller liquidities entering. That is what we metaphorically refer to as spreading oil in the pan before we fry the eggs, which is really unhealthy, but no one says that trading is a healthy habit anyways. So I think it is fair to what really is. Let's look at the liquidity. This is the liquidity yesterday before the move up, and let's see what happens after. I love to do the update the day after, and you can tell that the liquidity to the upside, the vast majority got taken. And that means that that incentive to go to 89, yet that line, that thin line is becoming heavier, but we took a big chunk, we have to admit. And what we have at the moment at 81, it is very, very difficult that we don't take it. Remember, during these events, both sides get love. And so far, the longs got tons of love. You can see how many BTC longs got liquidated with over $1 million. Yesterday, they were roughly around 500 million in liquidations. 55% were in long. And I think it's the turn for 81 as well. So careful with that CME gap, how you trade it, how you manage your risk. And remember that CME gaps are not guaranteed to get taken in a short time span. Let's look at the 30 days and let's see who are the bosses in here. We still have the 89, that's still on the table. We have an 87.8. And right above the price at 84.3, which is kind of the beginning of the fair value gap. If you want, the fair value gap doesn't overlap with a lot of liquidity, which makes it less attractive, let's be honest. And 81, it's also an important level. Let's look at the order book. Let's do some forensic analysis in here. You can see that the longs came back. We were moaning that they were at 45, that is likely a top. I pull out when we went to 52. After that, they came back, but then they put a new low. That low is the rack pull. Those are longs in global accounts really pulling out at that top. And if you were in a trade and you had access to high block capital, you will have noticed that this went precisely to the previous rack pull. The previous rack pull, we went to 88,700. This one, we went to 88,700. And we have the same reading of global longs versus shorts. By the way, this dashboard, the link is in the tradingparrot.com/charts. You can copy this dashboard, but you're gonna need a premium account on High Block Capital. And I have a discount in the description, which of course also helps the channel. So at the moment, what I'm seeing that is bullish towards taking that CME gap, and that's regardless of if first we take 81 or after, is the longs have increased pretty decently in here. So this is a spike of 35% of new longs going from 45 to 62. That is very close to the 67s that were pushing the price up in all this bottom in here. Second, great alpha is to be in extreme fear. That's bullish. Third, great alpha is that longs are persisting in here. So we have a spike of 15 and now we are reading 11, more or less with the highs of areas that longs are wanting to defend. Bid means that there are limit orders for longs below the price. And at the moment, we got rid of all this delta in green that I didn't want to trade. I pull out as soon as I saw a spike of elevated risk for longs because I was already seeing too much risk from other sources and overlapping with liquidation levels exposed with a delta hitting longs more was just too much risk for me. And at the moment we are back into the red, but I will say it's just flat because 30k is nothing. It needs to be 300k, 500, 600k to really be something. And on the order book on FAR charts, let's have a look at the monthly, and you can see that the price suppression has moved or has left. Actually, we don't have it today. Price went very close to that level at 90k, and since the price started collapsing, they just remove it. The support is at 75, 74, 76. We could say there is some support at 81 with 20 million, but the 70s combined, we could say it's around 70 million below. Resistance is 88 with 22 million. Let's look at trading light, and you can see that they are trying to short 84. The VWAP is at 84,100, which is supposed to attract the price back into the median. You can also see at the top that they have pulled the 89,500. They were just thinking if price goes here, we're gonna short it, but it never happened. We have this support with 3 levels below the price, protecting 83, 82.8, and 82.6. And if we go much below the price, you can tell that with this dump, they wanted to fish 71. Those sneaky bastards were thinking, hey, we're gonna crash. That is the target. Let's buy 71. But it hasn't happened, and then they pulled. The 66 is constantly there. It has never gone. In quite a long time, we could say since the 10th of March, they are waiting for 66. And at the moment, we are no longer in the area of value for looking of longs relative to delta. We use that to enter a trade this time. And in theory, if we are in an expanding channel, we haven't yet got there. We are just halfway through towards the top. Not necessarily that we have to get there, but you know, the channel since 22nd of January has been respected and we've been oscillating between the two extremes. Fair value gaps. This is the fair value gap I was talking about, from 84 to 86, and this joins the group of things that are bullish for upside. So if price wants to close this gap up until 86, that will be slightly beyond the end of the CME gap that ends at 85.3. And remember that we have these two vacuums of 8K. One vacuum is from this fair value gap into 75, and the other one is if we close this gap at 86 and we were to continue higher and taking the high from yesterday at 88,500, then that's an indication that the bulls are really gonna persist on this to go to 95K. Remember that my video yesterday was 95 or 75, and I continue to think that this line in here of resistance, if we can close above it and hold it properly, then we can go to 95. There's no market structure, so expect that if there is a breakout, it could be just so fast that by the time you know it happened, it could have already hit 95K. And the same goes for this area of vacuum of 8K. If you don't have risk management, thanks to no market structure, up until 75, a fall can be really fast. Guys, this video is getting too long, but I really want to cover in a separate video what's going on in here with general markets. Look at the dollar, the gold, the VIX, everything is doing something important, and I don't want to do this video a 40-minute video because then everybody's complaining in the comments. If you want to support the channel and you're looking for a new exchange to trade, consider OKX. You can grab yourself 60,000 in rewards. You have still time up until the 7th of April. The link is in the description, and of course by using that link you get the lowest fees to trade. And my second exchange at the moment is Bluffing, which is currently offering 10% cashback to the first 50 users that use the link in the description. This is a non-KYC exchange. Whichever exchange or product that you find in the description that you decide to take discounts for yourself is definitely helping the channel to continue putting alpha, not just every day but multiple times a day, to grow my team, to edit my videos, to write down the articles on Patreon and all of that, and more things to come, of course. Thanks so much for watching. I'll see you on the next one. Bye bye.